Good morning, everybody. Hey, welcome to Tuesday. It is May 6th. Hard to believe. Before you know it, we'll be halfway through this year. Hey, we've had a little bit of retrenchment yesterday, and it looks like a little red ink today. We'll talk about that and more when Dave joins us here in just a few seconds. Hey, before we do that, though, let's not forget that the world we live in, there's so many things that are out of your control and my control. But I want you to know you can take control of your investment portfolio by knowing the amount of risk you have and making sure it lines up with the amount you should have. Give us a call, 863-382-0037 to schedule your core retirement analysis. Hey, we got Dave coming up next.
Speedwagon there from 105.7 Highlands Light FM. Good morning. Appreciate you being here. It's 8:40 now, 20 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And it's time to check in on your money and find out what's going on Wall Street with the resources of that financial advisor you want to get to know, Phillip Statler from Statler Financial Services in downtown Sebring. Good morning, Phillip. Happy first of the week here.
Hey, good morning, Dave. I wish that we could start the week the way we ended last week, but that just doesn't seem to be in the cards.
Well, we had the best run for the S&P since 2024 or something going, and it wasn't all that bad. But yesterday, you're right, we just ran out of steam. Everything pretty much went down. It wasn't catastrophic, but it was a down day. Dow was down by 289. The Standard and Poor's was down by 48 and three quarters. The big loser in the bunch was the Nasdaq, down 231. That was about 1.16%. And the fact that the NASDAQ went down even more, interest-sensitive growth stocks, I'm kind of backing myself up with a theory I had yesterday morning when I saw stuff heading down. I just think the smart money is taking it off the table until we figure out what the Fed does tomorrow afternoon.
Yeah, I think, yeah, because the Fed, you and I were talking before we went on the air, they really have a no-win situation. They're going to catch it no matter what they decide to do. If they hold rates steady, which is probably what they should do, they're going to catch it from the president. And if they let it slide, then that opens the door for more inflation, and they'll probably catch it from the economist side. So, they're just in a no-win situation right now.
Oh, absolutely. I mean, you and I pretty much agree with inflation hovering in the core numbers up in the upper 2 to 3% range. We're definitely not there. We haven't licked inflation yet. So interest rate decrease probably, and I'm going to say probably, would not be advisable right now, only on the grounds that we do have that decrease in the GDP we got a couple of weeks ago that certainly augurs at the very least a slowdown that we don't want to see. I got to leave it at probably, but still, like you say, the economic community is going to have kittens over the notion of an interest rate drop. Odds are still saying it's almost a slam dunk that we're not going to do anything, which means we're going to get a face full and a half out of President Trump. It'll be announced at 2 o'clock, press conference at 2:30. And I'd bet you dollars to donuts by 3:15, President Trump will have something to say on Truth Social. Just what an absolute dweeb Paulson is. Wish he'd leave. May they flush him down the toilet or whatever else President Trump is likely to say on social media. And it basically, if I had $1 jillion that I had invested in the market right now, combination of an opportunity to take a little bit of profit taking after a couple of weeks of good growth in the stock market, I just kind of rested for a minute in bonds or gold or someplace until I figured out what happens tomorrow afternoon.
Well, yeah, and that's the key is we've got a whole day, almost over a day before we figure out what's going to happen, and so that's going to be interesting to see what people do today.
Absolutely. A couple of things going on that may affect a few investors' stuff. We got to figure in the trade deficit. I don't know that this really is going to mean much, but our trade deficit hit an all-time record high again in March, but they're saying that was primarily just stockpiling stuff in anticipation of the tariffs. We did get some service sector industry information yesterday after I got off the air from our report. Service sector reader from the ISM people and from Standard & Poor's. The ISM reading showed a pickup pickup in growth in service sector activity, which is good news. Tariff impacts on the small businesses. Standard & Poor's, on the other hand, showed sentiment falling to a 2.5-year low. So we kind of got conflicting readings, which kind of puts us in the same boat that the Fed's in. Which one are we going to follow? Are things starting to tank, or are we doing okay in the onslaught of that baseline tariff that we've got on everybody? I don't know what the reaction should be, to tell you the truth. Services should be, repeat, should be a little more insulated from the tariffs, but it does seem to make a difference, doesn't it?
It does. You're right. Services should be somewhat insulated, but they still have to buy goods. Just because you're performing a service, you still got supplies. Sometimes you still got materials, and some of those things are still going to come from overseas.
Yeah, if I'm a cleaning service, I still got to buy cleaning products, I guess, so it makes a difference. The big news yesterday morning that really was kind of micro in its impact, but just because it's so notable, Warren Buffett announces his retirement from Berkshire Hathaway and appoints his number two banana in as the new CEO, which didn't surprise anybody. He'd named him that a long time ago, but now we got a date certain. Berkshire Hathaway went up right after that announcement, but I gather they had a second thought and kind of fell a little bit yesterday. Maybe they're going to miss Grandpa.
Well, he's not stepping totally out of the picture either, Dave. He's just giving up his role as a CEO, Chief Executive Officer. He will remain the chairman of the board of Berkshire Hathaway. So he still will be involved somewhat, but just not maybe so much in the day-to-day operations.
Yeah, what is he, 94 years old now, or something
94.
like that? His
94.
second banana is in his upper 80s, so it's not like he's turning it over to the kids.
No, 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 no. That's not right, Dave. The guy the guy he's taking it over is in his mid to late 60s. I think he's
Okay.
69.
Oh,
He's 69.
a real kid then.
Yeah, yeah.
The guy I saw the feature had his second banana for the longest time was almost as old as he was. So it's a spry young kid of 69, right?
Yeah, exactly. So, hey.
Do you see another change coming sometime in the next few years? Other stuff going on. It's really quiet. We're going to get a bunch of stuff in from AMD and Super Micro after the close today, as far as notable stocks are concerned. The one of those rare days in which, when I look at my calendar, economic data. No notable economic data set for release today. Gosh, I guess we're just going to have to talk about the stocks we're trading, and we do have some household names to talk about there. How did Ford do last quarter?
Hey, Ford, they really did okay. I mean, they beat on earnings by 12 cents, came in at 14 cents a share. Revenue was a little over $1 billion more than expected. You would think they would be flying high, but they pulled their guidance for the year, basically saying, with all the tariff stuff, we just don't know what's going to happen, and so we're going to pull our earnings and all our forecasts, and so that's got Ford trading down this morning almost 2.2%.
That's pretty large, given the fact they're not a really high-priced stock to begin with these days.
Exactly. Yep. So
I saw a sidebar article on one of my tip sheets that the tariffs are starting to impact auto parts shipments coming into the country. Remember, even if it's an American-made car, a whole bunch of the stuff, like the computers inside the cars and the stuff, coming in from overseas, and that's already impacting the repair business, and that's going to affect Ford as well, I'd imagine.
Well, absolutely, it's going to affect all the car makers
Mm-hmm.
as they walk through that process, but. Everything's going to get, with the tariffs, everything's going to get more expensive. But I read an article that said that, we, I think more than doubled our tariff income in March. And so, that was one of the things that Trump said is, he wants to basically replace tariffs with income tax, the vice versa. And so,
Yeah.
now if we see a reduction in income tax, and the tariff income being able to take that over, well, then that becomes more of a type of tax like we see in other countries where it's more of on expenditures and not on income, which
It's
you
really
can
kind of a
control that.
backdoor. Yeah, it's kind of a backdoor value-added tax, for lack of a better term. It's one of the reasons I've been circumspect about it. Yeah, because I'm an old economist by education. I don't like tariffs. One of my old professors used to say, no matter what the rationale is, a tariff is always at best a second-best solution. But at the same time, if we're using it to develop revenue and offset other revenue streams that might go down a little bit, I'm at least willing to listen. I'll give it that much. And if income is showing up, that's good news.
Yeah. So we get to that point. Hey, well, let's talk about a couple of other companies that reported.
Mm.
DoorDash reported, and they did well also. Well, I say that they kind of split the blanket there. They did better on earnings. They came in at 44 cents versus 39 cents. They missed on revenue by just a little bit. The other thing about DoorDash is they are acquiring a company called Seven Rooms, and Seven Rooms is a app that you use to make reservations, and
Mm.
so it's an all cash acquisition. They're paying, I think I saw $1.2 billion or something like that for it. 1.2 billion dollars. And so people aren't real happy about that. Between the earnings or the revenue miss and the purchase, they're trading down today 5.3%.
Almost sounds like they're trying to get into competition with things like Verbo and those, door, like I said, instead of delivering food, now DoorDash is delivering the door too, right?
Yeah.
It's
So
diversification that if I were a shareholder, I'd probably be leery about as well. What else
yeah.
we got?
So we do have a good old standby. Clorox reported,
Mm-hmm.
and Clorox missed on their earnings. Came in at $1.45 versus $1.57 that was expected. They were short on revenue as well. So that's got them trading down almost 2.9%. I did find one big winner though.
Mm-hmm.
Upwork. We haven't really talked about them much. They're the freelance market platform where you can hire somebody to do a project. And they did good. They came in at 34 cents a share versus 27. Revenue was more than expected as well. They're trading up 11.5% this morning.
Wow, they were spending money on advertising like drunken sailors last year and kind of disappeared for a while. I was wondering how they were doing. Just one of those weird cable TV ad companies that was okay. They disappeared. I wonder if they went out of business. No, they're doing okay, I gather.
They're doing okay, doing okay. Hey, let's close up with this one. It's not one that you probably hear about much. Plantar Technology is a defense technology company. They earned 13 cents a share. Revenue was I'm sorry, a little bit more than what was expected. But they're trading down 7.9% this morning.
Ouch. Resetting the table, it was an off day yesterday on Wall Street, like we were kind of semi-agreeing to their profit-taking and uncertainty about the interest rate situation. 45 minutes before we open, how are we looking today, Phillip?
I see a lot of red ink today, Dave. We've got the Dow down 65 basis points, $263. The S&P 500 is down 0.8%. That's $45. The Nasdaq 100 is down 1.1%, and the Russell 2000 is down about 0.9%. On the other side, we've got silver trading up almost 2.5%, back over 33 at $33.26. A big jump for them. Gold as well, up 2.1%, trading at $3,394 an ounce, and then crude oil up this morning 2.5%, but man, you got to like the number, still below 59 at $58.56 a barrel right now.
That's about $1 more than it was yesterday, so I'm not sure I like the direction, but I like the trading range anyway. Looking over the ponds, somebody must have put in a buy order from the Chinese government because both the mainland Chinese markets were up by better than 1%. One of them was up by 1.8% at the close this morning. That pretty much brought the entire Asian rim up above water this morning. European indexes are all over the place on balance after German markets being down by 0.7%. The British markets up by 0.10%. The average European index is off by about 0.15% halfway through their trading day, basically going nowhere with a tinge of pink on them. Getting my retirement together so that I don't need to worry about this day-to-day stock gyrations takes some advice from a pro. Phillip, how do I find you to get your advice?
Then give us a call at 863-382-0037 to talk about our core retirement design. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here again tomorrow morning to see if we can turn that red into green later on this afternoon. Fair enough?
Fair enough, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Take care. I'll talk to you again tomorrow. Bye now.